Okay. So the last class, we literally talked about structure, right? In a very, very simple and basic way. So today, we are going to be going like a little bit advanced when it comes to structure. So which means we are going to be talking about the discount and the premium pricing, and then we are going to be diverting into trading range, because all these things, they are still sectioned inside structure. So let me come again. We are going to be talking about discount and premium pricing, ideal pullback and incomplete pullback. Then we'll be talking about trading range, right? The reason I'm arranging all these things like this is because these are the things you need to make sure you actually understand, to actually kind of be able to like create a system for yourself. These are step of the study. That's why I didn't scatter everything. I'm trying to make sure I arrange everything. The first thing that you need to understand as a trader, you need to know your structure inside and out. So that is why I'm actually breaking it down into the simplest form. So the last time we actually have, I'm not sharing my screen yet. I'll be doing that right away. So the last time we actually talked about structure and all. So today, yeah, like I said, we are going to be talking about we are going to be going more deeper into structure. So let me share my screen so we can get started with it. Coming. Okay. Oh, oops. I'm coming, guys. Can you guys see my screen? I'm coming. I'm trying to put on the comment section so I can see what you guys are typing. Okay, yeah. So you guys can see my screen. That's good. I'm coming, guys. If you see me drive by, I'll at your boy. I pop my fuck. I'm coming, guys. I'm coming. I'm trying to make sure I arrange this properly so I won't miss anything. So now that you guys can see my screen, so let's get started with it. So I've explained the waveform of structure for you in the last class, right? So the next thing we are going to be talking about now is impulse and retracement of structure, right? So which is very, very important, because I would see a lot of people be like, okay, now I understand structure, but how do I know when a particular structure move is going to end, blah, 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 blah. Okay, so that is where this comes in, right? So now, come in, let me clear this board. Okay, so now, like I explained the last class, I told you guys markets move in wave, right? Not just, so which means this is our A, this is our B, and this is our C. Oh, sorry. And this is our B, and this is our C, right? So which means, I'm trying to make a summary of the last class, which means for us to have a true break of structure, market needs to break the structure B and the structure A respectively, right? So now, so that's just the summary of the last class. So now let's be talking about the impulse and retracement. We believe by what we see on the social media, they said when market moves like this, right? So we believe that anytime the market has moved to 50% of the initial impulse, that is a complete pullback, then the market would what? Create a new low. So that means for this to be a 50% retracement, that means market is already in a discount price. So again, if market gets to 50% right here or above, anything above 50% or 50%, that is a complete pullback. That theory is actually very, very right. But like I said, always in learning, always think about what are the variables that can make this thing not to work, even if this thing happens. So now, I will try to break this down into different parts for you. The first, let me be talking about the incomplete pullback now. The basic incomplete pullback is which one? Is when market is coming on an impulsive phase like this, and market refuse to pull back to 50%. Let's say this is the 50% level. So when market refuse to pull back to 50% level and create a new low, that simply tells us that this is an incomplete pullback, right? This is an incomplete pullback. So being an incomplete pullback now, what does that mean? It simply means that our origin, I want you guys to listen attentively. It simply means, so if you want to count this structure, instead of counting it like this, high, low, high, low, high, low. This is totally wrong because this guy has not fulfilled his purpose as an LD retracement. So what does that tell you? That simply tells you that our structure still remains high, low, high, low. Why? If this guy keep coming down without completing the rule of a pullback to 50%, we don't have a valid swing high yet. So which means this guy is still our swing high. And everything that is happening here is what we call the range structure. Range structure. So everything here, you should not be caught up by trying to look for trade inside here. For now, I am still going to explain a lot of things, but I'm trying to come as simple as I can. Why did I say this? Let me come again. This guy refused to pull back to 50%. So any consecutive levels that is creating, that refuse to fulfill this retracement to 50%, that simply means a new high has not been formed. Not until markets come, rally to the upside, because now, if I say this is my high, presently at this point in time, then this is my low. So now, instead of you to just be thinking it has to come to this 50%, remember, this range that we calculated, now it has expanded to this guy. So this high to this low, the 50% might just be right here. So which means it's not necessarily means it needs to come back here. But that is for the advanced part of things. So now if let's say this is a 15 minutes time frame. So if we go to like 40 minutes time frame now, this is what you would see there. You will see a high, low, then you see something like this. Low. This is what you would see. Which means this is still our high, and our 50% might be right here. So this guy can still sell from here. So everything that happens here is just a range structure, which is everything that happens here. So why are we ignoring all these things? It is because it is as a result of an incomplete pullback. Am I making sense, guys? Guys, am I making sense? Okay, so now I'm trying to keep this simple. Like I said, at the end of this session, these 3 months, if you are not profitable, just quit Forex. I'm telling you, just quit it. That's why I am saying this like as if I am teaching a primary school people. I'm not going to make it complex, but once we get to the complex part of things, you guys will be able to grab it, because I'm already building up with the simple follow through to get yourself to the end. I'm not somebody that will come here and start trying to show off that I know something. No, I want to teach. So that's exactly what I'm doing. So if you guys if somebody here has understood all these things before, don't get too bored, because I'm trying to build up everything from the beginning, right? So now, in summary of what I said is this: if you have market coming down, we believe market needs to pull back to 50%. So if this is 50%, if market come here without getting there, this is an incomplete pullback. So it is not guaranteed to be a high. So if market come back here again, it is not still guaranteed to be a high. Now, instead of us measuring, when we actually measure this guy, then we measured from this high to this low. That was why we said this is the 50%. But as the price keep expanding, the 50% level keep expanding too. So as at this point in time, when price was here, when we measure this high to this high, the 50% might just be right here. So which means market can just come here and sell. That does not mean market will not still come back here in the future, but that is not the class for today. I'm trying to explain structure for you. Do you guys get the illustration before we move to the next one? Do you understand? Don't worry, I get Mr. Lifeline. I love that question, but if I decide to answer that now, that means I'm moving too fast. I love that question. Make sure you keep up that energy. Like, trust me, everything you need to know is in my head. All you just have to do is to ask the right questions, and I'll point it out. So don't worry, that particular question, I'll come back to it. So now, let's now move to the second one. The second one is situation whereby market will, because this is the most tricky one. The situation whereby market create a high, low, high, then market what? Create a low, then this is the 50%. The market did what? Retrace to 50% and still sell. It is still possible for this guy to still be incomplete. It is still very, very much possible for this guy to still be incomplete, even though it pulled back to 50%. So how are you going to find out this? That is where the rule of momentum and distance comes in. I'll be using this rule a lot. This rule is a lot. That is where the rule of momentum and distance comes in. Like, for every swing, for every LD swing, you must have momentum and distance. What is momentum? Momentum means imbalance. Even though I have not talked about it here right now. What is distance? Distance means liquidity. Right? Momentum means this. Distance means liquidity. Right? I would have loved to start explaining all these things now, but that would actually make me scatter the whole syllabus. But let me try to explain it briefly so I can explain this concept. Now, imbalance simply means inefficiency, right? It means gap. And what is a gap? I'm trying to explain it briefly. I'm not going deep into it right now because I would actually have to scatter the whole thing. So you guys should bear with me. So imbalance simply means what? An inefficiency in price. When markets print a very strong bearish move to a single direction. But we know we are trading the Forex market. And what is Forex market? A market, you can never call a place a market if that place does not have the presence of a buyer and a seller. Can you call somewhere a market when there's no buyer and seller? Well, if there's only buyer somewhere and there's no seller, there can't even be a buyer at a place when there's no seller. And there can be a seller in a place when that seller knows that it's not going to see a buyer. So which means Two of them cannot work without themselves. So what will now happen if we now call Forex market? If we now call Forex a market? So what happens if there's now a very strong bearish move to one direction? Can you call this an LD market movement? Hello, I need answer. Anytime I say ask a question, I need answer to it, please. So you can't call it, because like we said, a market needs to have a presence of a buyer and a seller. That is the rule. So see, forget about there's a order somewhere that needs to be filled, blah, blah, blah. Their theory might be correct. But the simple theory is that for you to call Forex a market, there has to be a buyer and a seller. And if there's only seller, Forex will not just leave this thing. They have to come back to introduce a buyer to this seller that was empty. So the process of coming back to bring a buyer to this seller is what? Is what you call what, guys? Can somebody give me the answer? The process of introducing a buyer to an environment that only has a seller. What does that mean? You can call it rebalance, or you can call it what? Mitigation. Or you can just say market is balanced. You can say now the market is balanced. Forget other appearing. You can say the market is balanced, or rebalance, or mitigation. So that is the simple logic, and I'm sure it makes sense to all of you. Because if you create a store to a particular environment that nobody knows that there's a store there, that means there's an inefficiency in that investment. Because why would you create something that nobody is there to buy it? But once you start doing adverts that bring people into that store, that means what? You have rebalanced the transaction, the store. Now you can now call it an ideal market, because now you have advertised and now people have participated in the action. That is the reason why market needs to come back to an imbalance to fill it. There's an other logic behind it, which I'm still going to explain, an other explanation when we start talking about other blocks. But for this point, this is the most simple explanation. I don't want you guys to just listen, connect with what I'm saying, because all these things would help you analyze your chart and understand what is going on. That is why I tell you, I see price as transaction, not just by the candles. Because with what I explained now, you can know that this is beyond candle. And all of a sudden, you see the market will get here, rebalance it, then boom, 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 it starts falling. So the momentum means, when they say there's momentum, that means there's a direction. There's a focused direction to a particular bias. So that is what I refer to as imbalance, which I just explained now. And distance means how far the market is going. So the rule of momentum and distance now goes by, when you have an imbalance like this, sorry, you guys should listen closely. When you have an imbalance like this, and all of a sudden, after an imbalance, market did not rebalance it immediately, but market start moving like this. What does this mean? This is the momentum. You guys should focus. And all this right here is the distance. And what is the distance? Like I said here, distance means liquidity. So everything right here is liquidity. So the market would come and rebalance this order. Then after the rebalance, what do you expect? Market will now move to the opposite direction. That is why we used to get in around here. So this is the momentum, which is the imbalance. The distance is what? The liquidity. So what does this need to do with LD retracement? Now, let's now say this rule of momentum and distance will be used at every beginning of every swing. That is where we want to be using this rule. The beginning of every swing. So now let me draw something out for us now. So let's say we have a low, high, low. Then all of a sudden you also have something like this. Boom. Then you have an imbalance here. Big one to the sell side. Then market creates a distance after that. So this is our swing high right now. And let's say this is our 50% retracement right now. Pay attentive. This is our 50% retracement right now. Markets now come like this, touch the 50%, then sell. I know you guys have already get what I'm trying to prove with this simple thing. It gets to this 50% and sell. But remember, it ignored the rebalance right here. But it mitigated the 50%. What does this tell you guys? With what I've explained, what does this tell you? Is this a complete pullback or incomplete pullback? So, will you now say, you will now draw, okay, market took out a trend line liquidity right here. You now break structure. You now want to sell from here. Most of you must have fallen into that mistake and tried to do this. That, oh, market took out this liquidity here. But you forget that this guy, why will it get close to rebalance this guy, but it ignored it? So you already feel like, oh, this guy takes out liquidity and breaks structure. Now you want to sell from here. You just say the market will sell a little bit and stop you out. You just say you want to sell from here. The market will just do this, sell a little bit, stop you out, then dump. So this is an incomplete pullback, even though it filled 50%. Am I making sense, guys? Guys, am I making sense? Good. Now, we did that. So with this itself, right, you guys must have understand a lot of things right now. So remember, I said every swing must have what? A rule of momentum and distance right there. But there are situations whereby the swing would not have it. That is, if, let me explain that situation now. That is when you have high, low, then you have the imbalance right here, the big sell right here. Then after the distance come like this, you come down like this. Then immediately, market, this is the imbalance right here. Immediately, market did what? Come back to fill it, then create a new low. What does that tell you? That tells you that this guy has transferred his order to this guy. So which means this guy is our protected eye now. This guy is our eye now. So we are not going to focus on this particular momentum and distance again. We are going to be focusing on this new one right here. Guys, am I making sense? So which means we are not be expecting, this guy has been filled, it has been rebalanced. There's nothing to focus on there anymore. So now our entry will now be where now? I'm coming, I need to draw something. So now, this guy now does this, mitigated this guy, then did another momentum and distance after the mitigation. Then we now come, pin, 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 pin. So this guy has transferred money from here to here. So now, after transferring it to this guy, they took out this guy, this liquidity. I'm not even talking about liquidity right now. This guy transferred money from it, rebalance it right here. You can see that the imbalance was inside here. So this guy come back and fill it. So it is different from this one that I ignored it before creating a new low. This one came back to fill it immediately before creating a new low. So which means that is why we expect price to come here and sell off. You guys might not really get it now, but I want you to pay attention. But this one, it filled it immediately, then created a new one. So the money transfer has left this one. Now it is to this. So now this is the new momentum and distance right here. So this is the momentum and this is the distance. So now you're expecting price to come back, clear the momentum, then sell. Does that make sense? Does that make sense, guys? Guys, am I making sense? Am I making sense, guys? Somebody should reply me. So, guys, yeah, see, you can actually see when I say I see price based on transaction. All this is beyond you are just marking Quasimodo or you are just marking one kind of thing. So when I tell you guys it is simple stuff, you have to believe me. It is, because I can't believe anything that I've been explaining now is magic. It is simple, and I'm sure you'll be telling yourself down like, oh, why am I unable to know this? Because there's no magic here. And it's not like I created anything. This thing is there on the chart. So people will be like, it's simple stuff, it's simple stuff. Yes, it is simple. And with my explanation so far, you will see that it is simple. I'm not bringing anything up from my head. But you guys decide to just complicating things for yourself and all. This has nothing to do with Quasimodo whatsoever. This is something else entirely, which you guys, I'm sure your eyes is actually seeing it clearly. So, now that you already understand the two types of complete pullback, if there are more than one imbalance, we are going to get there. We are going to get there. We are going to get there. Like, when it comes to Forex, yeah, you need to understand money transfer. So once you understand money transfer, then you'll be able to know where they are going to without having to stress yourself over a lot of imbalance. So that has been cleared. So the next thing, and I guess I'm clear with this one, I can move to the next one, right? Guys, I guess I'm clear on this. I can move to the next thing, right? Okay, so now that I'm clear with this one, so now with the use of this and this and this and this ABC right here, let's now talk about trading range. Okay, so now I remember that I said ABC, C. So now, seeing this ABC now, what does this tell me? Let's say this is where price is right now. What does this tell me? This tells me that this is my trading range. I'm not going to be wasting our time much today. This is my trading range 1. But with the concept of incomplete pullback now, you will now ask yourself, pay attention. Now we have I, low, I. Then market stop here. Then we have A, B, C. So let's now say this is an incomplete pullback. This is the 50% right here. What does this tell you? This tells you that your trading range, which is year to year, market needs to come, take care of this B, to complete the pullback right here before it's going to sell off. So your trading range is this. I try to explain the relationship between these two guys, so how you can understand why this B needs to be taken and why this B is not supposed to be taken. So now, this is trading range 1, and this is the possible scenario there. Trading range 2 is now with the use of this. Let's now say markets came low, high, low, high, low. Then this is an incomplete pullback. Incomplete pullback A that is not up to 50%. That is the one I'm talking about now. So this is our 50% right here. And markets now come, clear it out, then sell. So market has actually took out this incomplete leg, and now a new high has been formed. So market is now swing high to swing low, then swing high to swing low. So where is our trading range now? It is guy to this guy. Am I clear on that? Am I clear on that, guys? So let's now go back to this one here. This one here, right now. So this is the basic trading range that you can find. This is the basics as per, today is the second class. So after this today class, we will now be talking, before I can go to other type of ranges, I will have to now start to talk about imbalance in deep and what? Other block in deep. So once I'm able to cover up those two, then I'll be able to like explain the other types of imbalance. But before I end today, let me use that trading range to explain this concept right here. Now, the same thing goes to the one that rebalance immediately. What does that tell you? This guy transfer money to this guy. So now that this guy has been done, this guy now transfer money from here now to here. So your trading range is now where? From this guy to this guy. So that means this is a trading range type 1. This is a trading range type 1. Sorry, type 1, type 2, type 3. We are still on the basic level, my brother. Type 3. Once I get to liquidity, once I explain liquidity, I would explain a valid A for all of us.